Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Scott Nations, President of Nations Indexes, for an update on what's happening with Nasdaq Volatility Index, what we call VOLQ, as we enter earnings season. Of course, we'll talk about trades to trade those trends. Scott, it's great to see you as always. Welcome back to Trade Talks.
Thanks so much, Jill.
All right, we got through the first official week of earnings with the banks just knocking it out of the park. What was the reaction with VOLQ?
Well, that's really interesting because, as markets rally, we expect implied volatility, and that's what VOLQ measures. We expect it to come in some because there's less fear, and we certainly saw that. So now on Monday, the historical average, long-term historical closing average for VOLQ is 1773, and right now we see it below 16. We see it about 1580. And that's really interesting given the fact that we are, as you pointed out, in the middle of earnings season. We have some big earnings coming out later this week. We have Netflix tomorrow. We have Tesla on Wednesday. So the fact that VOLQ is so much lower than the historical average is really interesting.
Yeah, it is interesting. And you would think with it being at these levels that you could get protection cheap at this point. And as you know, we're all very well aware of, companies like Netflix, like Tesla, can deliver some surprises to the up or downside. And you would think that putting on protection at this point might make some sense here.
That's absolutely right. Those are both huge companies, and so they have a huge impact on the indexes, but they're also relatively new companies. And, Netflix can have some wild subscriber changes. Tesla has all sorts of things going on. So you're absolutely right. If you wanted to hedge a portfolio that looked like the Nasdaq-100, then one way you could do it, and in fact, a great way, given all the prices, would be to buy VOLQ futures. You can buy a VOLQ futures contract at the Mercantile Exchange, Chicago Mercantile Exchange. The ticker symbol is VLQ. And as I mentioned right at the top, as markets go up, as they rally, we expect implied volatility to come down, but that works in the reverse as well. If the market has a tough time, if the Nasdaq-100 has a tough time because one or more of these companies really disappoint, then VOLQ would spike, VOLQ would rally, and that would be a great way to hedge an exposure to the Nasdaq-100.
And Scott, if you don't have a futures trading account, you're a little bit new to this, are there other ways that you can put on protection when it comes to a Nasdaq-100 heavy tech portfolio?
Sure. Well, buying a VOLQ future would probably be the best way right now. Another way would simply be to take advantage of, say, the Nasdaq-100 options. NDX is the ticker symbol there. Although that tends to be, that's now, given that how the Nasdaq-100 has rallied, that tends to be a really big contract. You could also do something with the QQQ options. So right now, well, let's take a step back, Jill. I often recommend, if you're buying protection, to buy a put spread because it reduces the cost of the whole thing. But right now, given where the markets are, how cheap options are, that we have all these earnings coming out, this might be a time to just step up and buy a put, buy an outright put, buy something that expires in about 30 days. That's a little bit out of the money. That would be absolutely pure protection for a Nasdaq-100 portfolio.
And Scott, as we look beyond earnings, what are you going to be watching for Q4?
Yeah, wonderful question. I think that we're going to have to get past worries about interest rates and inflation. I think that could be the most important thing. And, given that technology stocks tend to not pay a very high dividend, they can really be impacted by higher rates as people realize that, hey, I'm not getting any dividend from my tech stock. Let me go into something that is going to pay a better rate of return. That might be fixed income if we get the 10-year yield back above 2%. So I actually think that once we get past earnings, interest rates and inflation are going to be by far the most important thing for anything that looks like the Nasdaq-100.
All right, Scott, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.